Hello and welcome today to our afternoon session. We are going to talk about compliance, ESGs and SDGs and how can we deliver. And I've got some fantastic panelists here today who will definitely introduce themselves. So I'll just first introduce myself. My name is Susan Palola and I am the founder and CEO of Jubix Limited. Jubix is a financial intermediary that connects startups and social projects to the relevant expertise and investment in a two-sided marketplace. We do this anonymously, so all connections are done in an unbiased way, and you're able to, track the effort that is participated across the network, as well as calculate how much these participants would cost over time. I will now pass it over to Kemi-kun to introduce himself. If you just take yourself off mute. Kemi-kun?
Hi, everyone. My name is Kami. I'm from Nigeria. Hello. Okay. I'm from Nigeria, and I work presently as a production analyst at the Coca-Cola Hellenic Bottling Company, one of their plants in Nigeria, Nigeria Bottling Company precisely, and Kano plant. So what I do majorly is I analyze the production materials that needs to go into the process, and I also calculate our resource efficiency. And I'm also into sustainability projects. I've also been able to work with youth in Nigeria with sustainability initiatives. Presently, I'm the director for Sustainability Development Goal 12, Responsible Consumption and Production, where I work with youth to bring their initiative into a very problem service availability space where they can solve their problem with very great impact. And also the global ambassador for International Supply Chain Education Alliance, where I also bring in my expertise into expanding the community and educating youth around supply chain and sustainability. That's what I do. Thank you.
Much for that, Kemi-kun. And if we could have Priya, if you could introduce yourself.
Sure, thanks, Susan. Hi, I'm Priya Vilhani. I'm a technology entrepreneur, and I'm also the head of operations for Government Blockchain Association, a global non-profit organization that brings together governments around the world, facilitating efficient, ethical, and rational adoption of blockchain technology. We've grown from 1 person to 15,000 members, 50 working groups, and 120 chapters across the globe. I'm passionate about inclusion, sustainability, and climate impact, and also lead Sustainable Environmental Stewardship Working Group. This working group brings together people across the world who are passionate about supporting environmental initiatives through utilization of technology. I'm joined by some brilliant and beautiful minds like Nolene here, who work tirelessly to make sustainable attainable.
Thank you so much for that, Priya. Nolene?
Hi everyone, really great to be here. So I'm Nolene Mariappan. My background was one in project development and turned entrepreneur when I realized that I had a love for business and people and love seeing things develop and grow. But one of my major focus areas is one of social impact, and realized over the last decade or so that there was so much happening within the social impact space, but very little of it was measured in any reasonable and comprehensive way. Also that there isn't very much clear messaging around sustainability, what it actually means for organizations. And over the last 2 years or so, we've seen an incredible increase in countries signing up to development goals. So in sum, I'm an entrepreneur, social impact entrepreneur for the most part, and also a consultant with a focus on sustainability. And one of my major aims is making sustainable attainable and maintainable, which was something that was quite cool that we came up with in the SES group. I just want to be able to help organizations as much as possible to be able to integrate sustainability practice and into their day-to-day operations in a way that's actually feasible for them, so that it's not such a mission that organizations are immobilized, because there's just so much out there. And yeah, that's it in a nutshell.
Thank you so much for that, Nalini. I really impressed by all of your profiles, as why I selected you to come on the show today. So I'm just going to give a quick overview about the subject in question before we actually go to the questions themselves. So over recent decades, the role of business has shifted from a focus of purely maximizing shareholder value to taking into account the sustainability of a company's operations. The management of environmental, social, and governance (ESG) issues has moved from a niche area that sat in the compliance of or CSR department of a company to a core strategic priority embedded throughout organizations. So we're going to go into our first question today, and our first question is, why is it important now more than ever to integrate SDGs and ESGs into your business framework? I'm going to first hand that over to Priya to first answer, and then if Kemi could come in after, and then Norleen. Over to you, Priya. Let me just take you off mic. Your mute. Yeah.
Sure, thanks. I think COVID-19 is driving a dramatic acceleration of trends and the formation of new economies. And that is why there is evidence is mounting that company performance regarding environmental, social, and governance factors contribute to business success. I think there is a great story behind this whole ESG thing. Is one of the ESG investing's harshest critiques were the late Milton Friedman. And for those who don't know Milton Friedman, he has been quoted as the most influential economist of the second half of the 20th century, or possibly even all of it. And he's also the winner of Nobel Prize in Economics. In 1970, Milton Friedman had published an article in the New York Times. His article was fierce. It proclaimed that companies should not worry about eliminating discrimination, providing employment, or avoiding pollution, but instead must solely focus on maximizing profits for their shareholders. There's only one social responsibility of businesses: to use its resources and engage in activities designed to increase its profits. And obviously, believe it or not, the article was a huge success, so much so that it was dressed in fancy mathematics to become one of the most quoted articles of all time. But thinking about it, the success of the article was not because the arguments were sound or powerful, but rather because people desperately wanted to believe. At the time, private sector firms were starting to feel the real pressures of global competition, and executives were looking around for ways to increase their funds. The idea of focusing totally on making money and forgetting about any other concerns with respect to employees,
I think we seem to have lost Priya for a second there. Kami Kun, if you want to come in until Priya gets back with us.
Okay. Why I feel ESG should be incorporated and integrated into business strategies. First thing is now.
Okay, wait 1 second. Hi Priya, sorry, your reception got cut out there for a second. So I don't know if you know where you've last finished off.
I do.
Just continue to, yeah.
Okay, sure. So I would go a little bit back. My voice is echoing a lot. I don't know why.
So I put everybody else on mute.
Okay, is that better? I guess so, yes. Okay. I was just talking about this article about Michael Friedman and why it was such a success. So the idea is it wasn't successful because it was very sound or very powerful, but because people just wanted to believe it at that point. The idea of just focusing on money and forgetting about the concerns for employees and the social values, etc., just seemed really lucrative. And hence, some people made a lot of money with it. And to quote one of the examples is General Electric. They had an astonishing growth from $14 billion to $484 billion. And then CEO Jack Welch was actually quoted as the manager of the century. So for a time, it looked as though the magic of shareholder value was working. But alas, time has shown that the resources on this planet are not infinite, and it does not take a lot of creativity to see how future generations will judge our mindless littering of oceans, extinction of species after species, or our still widespread, indifference towards climate change. As a consequences of all these monumental challenges, priorities are finally shifting, and in recent years, the topic of sustainability has manifested itself as a global trend on all levels. It's important for individuals, it's important for businesses, and also in the political realm. And hence, sustainability is no longer just about philanthropy or having the halo effect of building a strong marketing image for customers. It's a modern driver for innovation while being an efficiency cost saver as well as a necessity for long-term growth.
Thank you so much for that, Priya. We're going to pass it over to Cami Kuhn to chime in. I think you're on mute. 1 second. If you take yourself off mute.
Okay, now. Okay, why I feel ESG should be incorporated into business strategy. Why? One thing is because now, we are now the era we are now, the airlines are becoming aware of the impacts of companies' operation on the environment. One thing is, climatic crisis that we are faced with right now. Some corporations are affecting the environment. Like Coca-Cola, Hellenic Bottling Company, for an example. Most of our products is our large percentage is water. So one thing that we focus more in our operation is water reduction, so that in the plant I am right now, the company created a kind of a synergy between themselves and the community by creating a dam in which we also tap from the water from the dam to as an input into our operation, and also we give the community part of it. There we've been able to gain the community's approval to work in their area, and also we invest in their local talents. Also, because you know that in the future, these guys will be our workers, and we also want to improve the environment. We also want to improve the country. That's why is in the company, and also the governance of the company has really been very, very, very strategic about what they do business wise. They've really been able to focus on employees growth, because they know that they have to plan succession, like role succession, and to also improve that their productivity also improve at work. So incorporating all of this into business growth help to increase the top line growth in the long run, and also to improve the employee productivity, and also to also help the environment, the society to grow, the growth of the society. So it's really a very great initiative to incorporate ESG into your business strategy. It helps a lot.
I love that. Oh gosh. Like your last statement there, Cami Kuhn. So if we could have Nolene, if you could answer the question.
Sure. So quite a lot of it has been covered by Priya and Kamakun, so some of it is just going to be me reiterating. I think there is a difference between ESG reporting and SDGs, so it's good that you actually differentiated between those two. ESGs are very much around the reporting mechanism. how you actually, the behaviors that you integrate and implement in your organization, and working toward the greater sustainable development goals are about the bigger picture, and it is about impact. And I think the reason that it's important to focus on both of these is for that very reason, because we need to be focusing not just on behaviors within organizations so that they can present these great reports which show how many policies and processes and trainings and that sort of thing they have and are implementing, but actually how much of an impact it is having more generally. One of the reasons that it's important to look at these is, as Priya alluded, we can't look at just the shareholder emphasis, because we face a situation where it does end up being a tragedy of the commons. It doesn't actually matter whether for a short period of time there is benefit to one particular group of stakeholders. In the longer term, we are, all of us, stakeholders in every organization which has an impact on the environment, which has an impact on society. And it is so interrelated that, particularly in terms of supply chain and looking at the entire process and the roadmap of that there's a knock-on effect at every single level. And the reason to integrate this is because unless you do, everything ends up being something which is viewed in isolation. You don't actually look at the greater impact and the knock-on effect of everyone that is involved, all stakeholders. So looking at your suppliers, looking at your distributors, looking at every person within the organization. Outside of that, moving from the view where it is just about doing good for people and the environment, the other point is also around profitability. Even if it's purely from the perspective that a business wants to be profitable, in this day and age, moving forward, the only way that that's going to happen is if they start taking into account factors around the environment, factors around social impact, and actually working toward those sustainable development goals, because consumers are becoming more conscientious. We're moving into more of a decade of conscious consumerism. We're moving into an arena where people are thinking about the organizations that they work for and who they champion and who they get behind. Investors, all investment is moving toward becoming impact investment. So if organizations want to be able to build and grow and get ahead, irrespective of whether they're doing it for the greater good or they're doing it because they're thinking about their profitability, this is the way forward. And I'm sure I'll think of other things after this, but for now, that's it.
Thank you so much for that, Nalene. Let's move on to our next question. So our next question for today is, I think Nalene just touched on this, are investors interested in impact-based solutions? So maybe we can talk about, if they are interested, where should they go for these so-called projects and grow the awareness of that. So maybe Priya, you want to start?
Sure, yes. I would say certainly yes. Impact investing basically refers to investments made into companies with the intention to generate a measurable, beneficial social and environmental impact, alongside, of course, financial return. And they are typically ESG is on the mind of investors today, and I think there are several reasons for that. One would be public awareness, ESG-related risks and opportunities has placed sustainable investing at the top of the global agenda, and with creation of major milestones like the Paris Agreement, UN Sustainable Development Goals, and of course after COVID, it has definitely put a spotlight on the value of environmental, social, and corporate governance considerations in financial markets. There is a lot of evidence that strongly suggests that investing in sustainable investing focused funds won't compromise the returns. There was a study by Morningstar and they actually checked more than 700 European sustainable funds, and that showed that over 1, 3, 5, or 10 years, the majority of those funds outperformed non-ESG funds. So obviously, as this global pandemic has forced investors to reassess their portfolios, it's clear that they're broadly adding sustainable investing strategies, reflecting linkages between sustainability issues, the economy, and the corporate financial performance. And I think there is a lot of, there's quite substantial numbers as well. For example, 82% of European investors already integrate in ESG related aspects in their investment processes. There was a study by UBS that mentioned while in Asia and America, the same figure was about 76 and 70%. But Asia obviously shows highest potential for future growth. I mean, there are certain things. For years, the sustainability agenda has largely been driven by environmental considerations and challenges, often for businesses as either as a risk to be managed or something to be documented and demonstrate positive, but largely incremental improvements. I think that type of approach has served its purpose. We now, sustainability has mainstreamed into value in supply chains, moved from risk to opportunity, and is discussed in financial, societal, as well as governance terms, and is therefore receiving increased attention from I think consumers, governments, as well as investors, and hence there is a key role for ESG metrics in investment. And I think one of the key things that impact investing challenges the long-held view that market investments should focus exclusively on achieving financial returns, and that is, I think, the best aspect of it. Susan, you're on.
Yeah, thank you so much, Priya, for that. And Noreen, if you would come in.
Sure. So I'll pick up exactly where Priya dropped off on that. But it is that now investment is moving away from looking at just financial considerations and taking into account considerations for the main environmental impact. And it is seen, finance is seen as the driver that can actually make all other, or attainment of all other sustainable development goals possible. So in a lot of ways, it's both the carrot and the sticks, and we're not going to get away from that. It is going to be a driver. There have been numerous discussions between countries in looking at how it is that they actually get to a point where they're looking at sustainable finance and how that starts to be, how that can be implemented across the board, across systems. So it's not something which is in the distant future. It is happening. There is pressure from governments, initially on private finance, but also within banking, to look at how finance is sustainable, how finance is taking into considerations the impact that the organizations that they are financing are having. And while there is that movement away from risk and actually looking at it as an opportunity, financial institutions are actually talking about sustainability in terms of risk. So when they are assessing companies, they are actually assessing them on a sustainability scale. They're being assessed in terms of risk to the financial institution. And that term is being used in parallel to sustainability practice. So, whether investors want to or not, there is increasing pressure for them to be more transparent around the nature of their finance being sustainability finance and impact finance. there is more and more of a move toward investment, highlighting the positive impact that it's having. And some of it, to some extent, is a level of greenwashing where organizations are, there's the impression of, and it aligns with that, conscious consumerism and basically tapping into the needs and the wants of the market. So it's driven in that way. But at the same time, there is too much happening within the economic environment. There are too many market drivers. There are too many key stakeholders within the chain of startups, of growth, of scaling, of outcomes that are not just focused on, but highly dependent on showing the impact that they're having greater than just profit. And so, yes, impact in terms of investing and impact investing is on the rise and is going to continue to be. I think it's increased by about 400% in the US over the last, I think it's about 2 years, which is absolutely incredible. It's continuing to be that trend across numerous other countries. And with more and more countries signing up to global goals, particularly around the environment, but also sustainable development goals, that's going to continue to be the case. So yes, all impact, all investing is going to become impact investing, and the knock-on effect is going to be, on smaller organizations as well, because there is a push toward larger organizations which are in the realm of looking for additional funding and looking for investment to scale, and they're having to respond on their sustainability practices. This is being passed on to smaller suppliers and to smaller businesses. It's something like 46%. I might be misquoting the exact percentage, but it's in the 40s of all large organizations in the UK are asking their smaller suppliers about their sustainability practices. And this is just going to, continue to happen. So all investment will be impact investment. That's the trend, and that's that's the direction we're moving in, and it's not a bad thing.
Thank you, Nolene. And if we could have Kemi-kun.
Yeah, I would like to say investors now are looking beyond the profits. Now, there are three bottom line that are not being considered, which is the people, the profits, and the planet, before they make decision in which corporations they're going to invest in. If you invest in a company at the same time you are helping the community, you are helping yourself. Why? Because if a company is committed to sustainability, committed to saving resources, in the long run, you can derive profit. And in fact, again, one thing again is that investors are not looking into having a good reputation outside, because they don't want to be known for investing in probably a company that has bad image, something like that. So I feel based on McKinsey's research, global sustainable investment has risen by 80%, like global. Considering let's say here in Africa, Unilever invested in
I think I made a refund. This actually keeps happening on the live, so it's something for platforms to have a look at. But I don't want to reach over to someone else when Kerry King comes in. Yeah, I think he's reloading now. Hopefully, sorry about that to our audience. Kerry King, you back with us? You're back with us now.
Okay. I was talking about the investment of Unilever into in Kenya indigenous farmers, because some of those resources come back into their process, so that they are trained about sustainable agriculture, and because then from there they're able to source, they're able to supply the company sustainably. So, and from there, the company is helping them itself. The company is helping the community at the same time, empowering the community to learn about sustainable agriculture, which at the same time helps the world to be sustainable.
Thank you so much, Kevin, for that. So we'll move on to our next question. Our next question is how can, well, there's busy we there. How can we collectively enhance change from a policy and regulatory perspective? So, what can we do to, enhance change? And I'd first like to pass this over to Nolene to first answer, and then if we could have Kemiku come in and then Priya. So, Nolene.
Yeah. So this is something which I think is happening anyway. I think there's a global recognition that there needs to be a shift, and that is happening. In terms of how we continue to move forward on the agenda, move this forward on the agenda, I think it is about not just collective action, but individual accountability. I think it's about individuals and organizations thinking not just about what organizations are doing and holding organizations to account, because that happens quite a lot. People are looking at what's out in the media, which organization is doing what's been reported, who has fair trade practice and every other mark under the sun. But it needs to really be driven down to an individual level. It's not just about institutions and corporates. It's about the part that every person plays. And if every individual starts, looking at their own sustainability practice, they start holding every organization that they're, involved with, or utilize every single supplier, everyone who serves their needs in some way, they automatically start holding them to account. So, on an individual level, for example, if you are looking at your practices, at your buying practices, and you're looking at the products that you buy and whether the packaging is recyclable, if you're looking at your energy needs and whether your energy is renewable, if you're looking at who delivers your goods and what their practices are, and you start asking questions of every organization that you are then involved in. I know it's a huge task, but I think when people start small and start with little things, it adds up. Automatically, the knock-on effect of that is that there are specific demands of organizations, there are specific demands of suppliers. I think, yes, on a policy level, you can hold out those big sticks. You can have, you can even have levies, and you can have fines and increased taxes and those sorts of things. But really, there is a great amount of power that is held by the consumer. And if we all start looking at our individual accountability, because it's sort of hypocritical if we're just looking outwardly and holding all of these organizations to account, but we're not actually looking at our own practices. And if we do, then pressure is continually applied. It's not just for us to say, well, everything needs to be a top-down approach and the government needs to hold people to account and hold organizations to account. Yes, they do, and yes, more could be done. For example, all organizations that register, when they become registered with Companies House, or they register a non-profit, or any organization that registers in any way, one of the things that could happen is they could, along with their registration, they have to have a sustainability plan. with their taxes each year, they could have a sustainability report. So those are the types of things which could happen and could be integrated quite easily into existing practices. But that actually takes pressure from not just organizations that are lobbying, but through every consumer that is actually putting pressure on society to behave in a more sustainable way, for every organization that they come into contact to start really taking accountability for the practice, and for there to be more of a collective shift from the bottom up, not just from the top down.
Thank you so much for that, Nolene. And if we could go to Priya. Priya, are you there?
Just figuring out if mute me or I should do it myself. Yeah, I think Nolene has beautifully covered most of the things that I wanted to say. Like she said, the changes to existing regulations are already happened. For example, led by the EU taxonomy or the Sustainable Finance Disclosure Regulation, they are all set to make reporting on ESG outcomes a requirement for client disclosures. And that would basically underpin the continued flow of assets into sustainable investing funds. I think as the world moves further into 2021, we are looking into an accelerated regulatory push beyond Europe that will further boost flows of sustainably focused capital. And Nolene has already touched on it, that one thing that really pinches is the lack of awareness. While we have conscious consumerism, we understand diversity is important. The one thing that's lacking is how to bring the knowledge to the masses. For example, when I was starting my own company, I did not know where to begin. So how can all individuals, like Nolene mentioned, SMEs can integrate these measures right from the beginning, so that you have a right foundation. For many, even for me, when I started back then, ESG brought to my mind environmental issues like climate change and resource scarcity. But these form an element of ESG, quite an important one, but the term means much more. It covers social issues like a company's labor practices, talent management, product safety, data security, and also governance matters like board diversity, executive pay, and business ethics. So it isn't just about a checkbox. It's about running a responsible and responsive business for the long term. It's about connecting your business to societal impact to create a sustainable business advantage as well as value. So I think measuring that how you are performing is like really important. So if you measure it, you can understand it, and then you can use that to improve it. I think that's what I wanted to say.
Thank you so much, Priya. We'll just go into our next question. So our next question today is, how can we collectively enforce change from a policy and regulatory perspective? I think we've kind of touched on that. I don't know if you guys want to, say one last remark. Is there any way that would like to actually add to what we've said already on that? No? Okay, great. So let's go to our next question. Our next question is, how do we set up compellable, sustainable targets and goals that appeal to the marketplace? So I'd first like to pass that to Kamikun. Kamikun, if you could first address that question.
Okay. I would like to say that in every operation, it should be tailored to the kind of industry you are first, because it's defined by what you operate. You have to take the impact, check your output, and then check the rate of your impact, your impact rate of the output. Like say in a bottling company now, we use more of water, we use more of energy, and we use more of let's say packaging materials like, let's say, plastic, glass, and then some Tetra Pak packaging materials as well. So it now boils down to, okay, what are the things that your inputs and your outputs, the impact it has on the environment. Check then get feedback from the community. That's one thing you should check. Like, make reports on how, or let's say in Coca-Cola Hellenic now, Well, one thing we report and we take very, very important is water use ratio, which is the amount of water we use in bottling a bottle of Coke. And then also we take into consideration again our energy use ratio, which is calculated based on the inputs, like based on output. That's a bottle. So it's something that you should, it's industry tailored, and you should check your metrics, check your impact rate. And then one thing again that I feel you should that aligns to it is, waste is um, a global issue. So you should just find a structure, find one thing is to tailor your impact and how it affects the society. That's one thing I would just say, because this is impact based and this is tailored. It should be tailored to your own industry. That was one thing I would say about that.
Thank you so much, Camille. Kun. And if we could have Noli, just the question.
Yeah. So I think one of the main things is we sort of mentioned this previously as well, that it can't just be about greenwashing. It isn't just about the impression that we want to give, and also it's not just about the goals that we want to set, but it's about the impact that we want to have. And I think that's really where a compelling case starts. And you almost work backward. And so, what is the impact that we want to have within the market? And the market isn't just about the consumer, the market is greater. The market takes into account everything, the environment, people who are affected, um, and the way that you operate. So, governance issues internally with your suppliers, but also beyond that, because you almost start to take on a level of accountability beyond your direct suppliers and distributors. So it becomes that they are actually being held accountable for their own practices as well, and the knock-on effect goes further. So I think in terms of creating um, compelling goals, and the messaging around that, it's actually looking at the impact and looking at what is going to make the greatest, or what is going to have the greatest positive impact in relation to the arena that you work in. So, what is the industry? What is the location, the geographic location? What is the context of that location? And very importantly, as well, what is actually feasible for you to achieve as an organization? Because it's all well and good for all of us to talk about how every organization should implement great sustainability practices, have this integrated into their operations and the rest. Priya talked about how it's so difficult to know even where to start with all of it. But really, it's about organizations recognizing what it is possible for them to be able to achieve given their resources and given their context, and starting to look at how their practices, and it's not just about policies and procedures and behaviors, it's about how their practices and and how their actions can actually have an impact, and what positive impact that is. So your goals are linked to that, and it's having that foresight to actually look at the roadmap for it, and um, basically, backwardly integrating into your policies, into your practice within the organization. And once you are aware of the context and you're aware of what it is that you actually are able to do within the environment outside of the organization itself, and the true impact that you're able to have, um, a positive impact, that is what people want. It's looking at the stakeholders, further beyond just the organization, and what is actually necessary within that specific environment. One of the examples, and I think we were talking about this, Priya, is you know might not necessarily be related to any specific organization, but there are a number of organizations which have CSR initiatives where they will fund specific projects to happen in local areas, so local communities, for example. And you take, two different contexts and scenarios. So exactly the same activity, which is building a school in a local community. Okay, on the one hand, what happens within that community is kids go to school. They're able to, they have the support, books and everything else. They do well. They go on to university with scholarships. They're able to support themselves, their family, and come back and do even more great stuff in the community, because one of the directives of them getting scholarships through this program is that they have to come back and support the community for a specific period of time. And on the other hand, you have exactly the same, a school is built, but within that community, kids are in a situation where the school is far away, they can't get to school, or they have to start working and supporting family from a very young age, which is a reality in many parts of the world. And, so the school is built, but absolutely there is no impact. Absolutely nothing happens as a result of that. So I think looking at compelling goals is not just about the goal. It's not just about building the school. It's actually about looking at the impact. It's looking at the environment and the context, and looking at what is the outcome that we want to have. What is our end goal, and how do we work backward and look at what we can do now to get everything in place to allow for that to happen. So, yeah.
Thank you, Nolene, for that. I actually wanted to touch on a conversation that I was having the other day with some guys, and they were talking about, obviously, life being all about, reproduction. Obviously, the fact that we are intimate with ourselves, and then we have babies. And I was like, but obviously it's easy to have a child, but to actually sustain the child, to be able to invest in their future, and to be able to actually create value, it comes from a lot more than just the giving of an egg or giving of a seed. So for me, I know that might be in a very different context from our specialist here today, but just to obviously bring it down more to a ground level, that sustainability is something that helps to for longevity. It's not just a short-term quick fix. So let's pass it on to Priya just to answer that question, and then we'll go into our next question. Priya?
That was a great example, Susan, and I'm so glad that Nolene, we've already discussed the school example, so I'm like, when she said that, I was really happy, and I was sort of inching today that, Nolene should give that example again. That would be very, beneficial for the audience, because it just makes a lot of sense that don't focus on the activity, focus on the impact it actually brings. I think, and yeah, I both agree with Kamikun and Nolene that they've said. And just to reiterate some of the things, I think far from just the window dressing, making organizations appear socially responsible to the outside world, there are real risks at play when we talk about ESG issues. So hyping market solutions to do good can create a bubble, especially if there's a gap between expectations about financial and social returns and the actual performance. And that would in turn divert the capital away from philanthropy and decreasing the grants allocated to social and environmental challenges. So Nolene has, I think, already mentioned this, that greenwashing can damage the appeal of the impact investment market and ultimately the trust of investors as well. So, for example, if people fraudulently label or sell traditional investment products as impact investments. So to answer your question, I think it's about that the accountability has to be embedded in the culture, but the auditability has to come outside so that somebody can ensure that, yes, whatever this organization, sought out to do, they are actually doing that.
Thank you, Priya, for that. Let's go into our next question. So actually, this is our final question for this afternoon. What standards? Sorry, did I ask the question on what accountability should companies use to track their ESG related performances? No? No. So let's do that one first, and then go into our last question for this afternoon. So I'll just ask that again. What accountabilities should companies use to track their ESG related performances? Priya, do you want to start?
Sure, I think we already answered this question.
Oh
And
my, okay. See, it's definitely a Friday. The brain
so
is
I think we
elsewhere.
didn't ask this question, but we've sort of answered then in our answers that the accountability has to be embedded in the organization's culture, and then auditability has to come from, for example, a third party who is actually ensuring that in terms of reporting and in terms of reports, etc., that all of that you promised that you would be doing is actually being done.
Fantastic. So that actually goes into our last but not least question, which is what standards are investors benchmarking against and what ESG regulation is coming, if any? So, Norleen, if you would like to start.
Yeah, sure. So if I can pick up on Priya's last point as well around the accountability, I think
Yeah.
it's so important that we do actually look at not just the reporting but the verification, so that as Priya referred to it as the auditability, that the auditing is actually happening externally, and the verification of impact, the verification of what is the practice, what is actually happening here, has to become more important and has to be something which is not just internal to the organization, but external as well. And I think internally, there's, in terms of accountability, organizations could start to implement practices like committing to, year on year improve on whatever the outcomes are. So whatever the reports, whatever the outcomes are of specific reports, and whatever the verification of impact is, that they commit to improve on that, the year thereafter. Um, Accountability in terms of just making sure that things happen, it's very, very difficult internally because it completely depends on the culture of the organization. So it's a tricky one, and it does have to be something that's embedded, and it's embedded not just in practice but commitment to the outcomes, and verification needs to come from an external source. In terms of standardization, this is a huge issue across the board. It's one of the things which makes it so difficult for organizations to actually start to embed sustainability practices into their day-to-day operations. There are tens of different frameworks. I mean, the 10 main frameworks, for example, have hundreds of different performance indicators that organizations can work to. Within those indicators, there are sub-indicators. So it's a mammoth task for organizations. But what is happening is that some organizations, including PwC, are looking at standardization of these factors. I've been talking to numerous players, and also working alongside Priya, and we've been looking at bringing something to organizations which allows for them to easily look at what is relevant to them and to be able to take them through a process of assessing where they're at, so creating a baseline, and progressing from that. There, a lot of it is around education and making people aware of what is actually possible and what is not, what is free and what isn't. There are a number of free resources out there which can be of great help in allowing for organizations to see where they're at and what they might be able to build into their processes. But at the same time, there's no complete standardization. There is a lot of work being done to move toward this, but it's not standardized. There is more and more that's being required and mandated in terms of reporting, but what you report on and how you report isn't standardized either. So you can use a number of different software platforms, for example, to be able to create your reports, but this is often out of reach to SMEs. It's the larger organizations that can afford to pay for this. So I think there's a lot that needs to be done, not just around standardization, but around accessibility, around education, around information, around really making sustainability attainable to organizations of all levels, allowing for them to understand what it means for them as an organization, what it means for them in terms of where they sit within the ecosystem, within the environment, within the social network, and how they can start to implement, even if they're starting small. And it's not necessarily integrating every single practice that that is out there, but it's being able to make a start and continuing to build on that. It's being able to get your organization into a position where you're at least aware of what it is that you could be working toward, and building in the option of continually expanding on your sustainability practice. So in terms of standardization, there is unfortunately no single way of determining which performance indicators you report to. I mean, obviously, the Sustainable Development Goals have a number of goals, but within that, you can actually take different actions. Within the within ESG, you have the broad, obviously, environment, the environment, social, and governance aspect. But within each of those, there are hundreds of different performance indicators. And in terms of reporting mechanisms, there are numerous reporting mechanisms too. So there's no standardization, but and this makes it somewhat difficult to be able to compare, because there's no like for like unless organizations are using the same reporting framework. But more important than that is, we have to move toward how are we looking at and assessing impact, and how are we verifying impact, and how are we making it, how are we making the means to be able to do this accessible to organizations, and increasing an understanding of what this actually means, what this whole sustainability agenda means for organizations, and how they can start to build in sustainability practice.
Thank you for that, Nerlene. If we have Kamikun, come in. Kamikun?
Okay.
Did you get the question? Did you get the question though? Because I know I kind of muddled up. So if you want me to ask the question again, okay, great.
Just reiterate, please. Please reiterate.
Reiterate, yeah? 1 second. So the question is, what standards are investors benchmarking against, and what ESG regulation is coming, if any?
Okay. What I would just say is investors are benchmarking against some specific policies and some specific standards, basically. And one thing I feel they are benchmarking against majorly is cultural change, in which we should drive more. I feel standards are not just there. Standards standard drives a purpose, and what we have to do to live by standards majorly is to have that cultural change that helps us to live in line with sustainability, because we all have to be responsible one at a time, and to be responsible for every act of our actions. And a monthly compoundly, it's really adds up and really helps us helps the corporation to live by sustainability. So that's what I would just say.
Thank you, Kamikun. Priya, if you'd like to add your last remarks.
Sure. Clearly, this is our favorite topic, as we can't stop talking. But yeah, I think there are several ways to do it. Things are improving. As Noreen mentioned, that there are tons of standards already there. And until recently, what was happening is that the sustainability standard setting organizations like Sustainable Accounting Standards Board were competing with each other instead of cooperating. But recently, key organizations in the world of sustainability standards have gotten together to form a common approach. And this would certainly be revolutionary in years ahead. First, standards are coalescing around the efforts of SASP to define corporeality accounting rules for sustainability data. So furthermore, the standards of the world, including the SASP, the Global Reporting Initiative, the Carbon Disclosure Project, the International Integrated Reported Council, and the Climate Disclosure Standards, they're all aligned around a common framework now. And also, the SASP is working with IRC, combining the two most influential of these organizations into one. There are certain frameworks that have come into practice. For example, Carbon Disclosure Project, that basically means it advises users to measure their risks and opportunities on climate change, deforestation, water security. Then there is framework like Task Force on Climate-related Financial Disclosure, and that basically ensures that there are 11 recommendations across 4 pillars, which is governance, strategy, risk management, and metrics and targets. And UK has also announced the intention to make a task force on climate-related financial disclosures fully mandatory across the economy by 2025. So that is going to be an important step in establishing consistent global climate and sustainability reporting standards. I think there is certainly a path towards a straightforward set of reporting that can be adopted around the world, making sustainable investing everyday investing.
Fantastic. Thank you so much for your last remarks there, Priya. I would like to thank, obviously, all of our audience that are watching us live here today. And obviously, this recording is going to be available for you to repost to your networks, as well as, obviously, if anybody has missed out on our session this afternoon. I'd first like to say a very big thank you to our panelists who have been absolutely formidable in their insights and they're sharing it with us today. And also, I would like to obviously, is it attainability, maintainability? I think we should have that as the last sentiment then, Norleen. I think you say it best, so go ahead.
Making sustainable, attainable, and maintainable.
Absolutely. I think that's a great way to end the session this afternoon. Please check out jubix.co.uk. We are obviously trying to connect the dots more than actually doing the improvements ourselves, but definitely connect the relevant participants to help with these SDGs, ESGs, and compliance issues. So yeah, have a lovely afternoon and a lovely weekend. Take care. Thank you.
Thank you.
Thank you, Kamikun. Thank you, Priya. Thank you, Nolene.
Thank you.
Bye. 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 Bye.